What is going on, guys? Welcome back to another brand new YouTube video. Today we're going to talk about something that I feel like is introduced to any beginner who comes into this world of Forex, right? But before we start with the topic, I would like to mention here just a little disclaimer that I'm not a financial nor an investment advisor. Whatever I teach here on YouTube is just sharing my knowledge with you guys. Whatever you choose to do with that knowledge is entirely up to you. So I'm in no way held accountable for your actions. Anyways, so when I was introduced to Forex, and one of the earliest courses that I took related to Forex actually, I would say that it was solely based upon the idea of trading these shapes and these patterns. Now, I had already seen these shapes and patterns all over the charts, all over the pairs, all over the time frames. No matter what pair, no matter what time frame, you could see these patterns. And so I was convinced when I came across this idea and this method and strategy, I was convinced that this might be able to work. So I feel like whenever a beginner is introduced to Forex, one of the first things he is introduced to are these shapes and patterns. But the problem with these shapes and patterns is nobody really understands what's going on behind these shapes and how the algorithms are designed to feed this idea and these shapes into your brain and then take advantage of that. So one of the courses that I took, earliest courses when I came into Forex, were solely based upon the idea that whenever you were to see these shapes, you were to take a trade. Even when I was taught how to do that, my mentor, he never really taught me when to enter and where to exit. Now, he would talk about exits, but as soon as he saw these shapes forming with no further indication, no further proof, no further price action, he would just jump into a trade. And where it was working for some of the people, it was not working for me, at least. I can talk about myself, right? So when I was introduced to the smart money / genius money concepts, that's where I really started to understand what was going on. So the problem here was whenever I was to pick a trade, my stop loss would get hit. And just in this video alone, I will show you guys what really happens and why your stop losses get hit. Okay, so first of all, I'm going to talk to you guys about the shapes and the patterns, and then I'm gonna talk to you guys about how they are traded in the retail world and how we trade them. Actually, we trade them in the smart money or the genius money or the institutional world. Okay, so the very first two shapes that you guys might hear about are these. Actually, let me draw it like this. So yeah, there we go. So the very first shapes that you are introduced to as a retail trader, as a beginner to Forex, are these two right here. And this is called a double top, right? And this is called a double bottom, or an M or a W shape or W pattern, M or a W pattern. Now these two are called, why? Because this has a double top and this has a double bottom. So M and W basically, right? Now when I was taught how to trade these, my mentor, whenever he saw this, a double top, he would enter somewhere here. Okay? And that's how I was taught. And when it didn't work for me, I started trading whenever I saw resistance. Whenever I saw resistance, I started trading. So whenever I would see two touches on a resistance zone, on a resistance line, I would just enter the trade. I would not even wait for this market structure to get broken. Nothing. I would not wait till here. Nothing. I would just enter on the double touch, basically. And that's how I feel like most of the retail traders trade these shapes, because we are introduced to this fact that these shapes occur at areas of support and resistance. That is very true. That is not wrong. But why do these shapes sometimes do this, right? Why do these shapes sometimes do this? Now, don't get me wrong. This is all still happening at areas of support and resistance, right? This is all still happening at areas of support and resistance. But why do these double tops and double bottoms do this, right? Why do they go that extra little bit and then go your way, or where it was intentionally or where it was intended to go all along? Why does this happen? This is what I want to talk about in this video, how the algorithm is designed and is manipulated, and the whole market, basically the whole Forex market, is manipulated in a way that the retail doesn't understand, right? The retail is going to take, trust me, every time market makes a double touch or double top at a resistance, the retail is going to take a trade. Every time it makes a double touch or a double bottom at a support, the retail trader is going to take a trade. So that is what I want to talk about in this video. Okay, so here on your USD on the 1 hour time frame, you guys can see this shape or this pattern right here. Now remember, we are told, let me actually draw it in a better way. We are told that this happens at areas of support and resistance, right? That is correct. It does happen at the areas of support and resistance. And so as you can see, the first example we're going to talk about is a double bottom. Now also, before I jump into this idea, I also want you guys to know that there are also triple bottoms and there are also triple tops. Okay? These are also introduced to the retail world, and these also do this and this all the time. Okay? So just wanted to get that out of the way. Double tops, double bottoms, triple tops, triple bottoms, same thing. The idea is the same thing. The ideology never changes. The concept never changes. Anyways, so I'd like to draw you guys' attention over here. We see all these touches. Now, what is the retail trader going to think? He's going to think that this, or they're going to think that this area or zone is a very strong support. Hence, why there are so many touches and there's so much resistance. The market cannot go lower, right? So the market is to reverse from here. Now we can see a triple bottom over here. And if you look to the left side, we also have an area of that was also the same thing. Okay, so we also have an area of, so the retail trader is going to think that this is a support zone. And so if the market creates some sort of resistance in here, it fails to break down lower, this might be a reversal zone or a reversal area. So what is the retail trader going to do? The retail trader is going to enter over here and they are going to place their stop loss somewhere here. It doesn't matter, right? Where, it doesn't matter. The idea is that the stop loss is going to be here somewhere. And what happens? The market creates a triple bottom and drops lower, then continues higher. This is where the market is manipulated. It is designed, the algorithm is designed, or it's encoded, and it's coded in a way that it is supposed to do this all the time. At supports, at areas of supports, at areas of resistance, it doesn't matter. It happens all over the charts, no matter what pair you pick, okay, no matter what time frame. So what happens after this? We as institutional traders, or as we like to call ourselves, we know that whenever this happens, whenever we grab equal lows and we reverse like this, we are supposed to take a trade. We are supposed to take a trade in this zone, somewhere in here. Whenever the market comes back, given that the market actually follows our criteria, which is the breaker market structure, impulsive move, engulfing price action, all that good stuff. Okay, so given that the market follows that criteria, whenever the market comes back is when we take a trade. So we would enter somewhere over here, right? Our take profit could be this area of liquidity or this area of imbalance. Our stop loss would be just beneath this previous low, okay? Just over here. So a 1 to 2 risk to reward, 100 pips. And you can see how the market, when it came to that area, it basically repeated the same thing. So we have a market falling down, right? We have the market create resistance, and we see a double bottom right here. We see that extra little bit where the market drops down even lower, hits your stop loss, and then reverses. Okay, so we as institutional traders, we know that we are supposed to trade. We are supposed to trade the patterns or the shapes like this. Okay. Now, that was an example for a support or for a buy. What happens when the market is at the top at a resistance zone, and when the market creates a double top? Okay, so we have a very good example over here. We can see that the market impulsive move is in an uptrend, and so we see that the market is coming up. It creates that resistance, that double top, continues a little bit higher, and then falls down, right? Now, if you were a retail trader, you would, let me just delete all of this. There you go. So you would take your resistance, you would place it somewhere here. You see the market reverse from here, so you're like, okay, you know what? When the market comes back again to this area, clearly the market is reversing from here. Guess what? We're going to take a trade to the downside. So we're going to take a sell over here the next time the market comes up. We're going to place our stop loss just above the highs and our take profit just below somewhere, right? What happens when the market comes back? The market comes back, does that extra bit, and then drops down below, right? Now, we as institutional traders, how do we trade D shapes? We know that when the market comes back to this area, or this vicinity, this zone, it's going to drop down below. So the market comes back into that area where the manipulation happened. We place our stop loss just above that, and our take profit somewhere. You can target the imbalance. Okay. It doesn't matter. You choose as it happens as the market progresses, as the market moves on or goes on. Okay. So the whole idea is wherever you see the manipulation, that extra bit also, you guys like to see this as the 1, 2, 3 move that I talk about in my videos. Anyways, okay. So anyways, wherever you see areas of resistance and areas of support, and then you see a lot of wicks, a lot of resistance in that zone being created, the market is failing to break either below a support or above a resistance, it is very likely that manipulation is about to take place in that area, because all those wicks are basically just a trap for the retail world to keep pouring their money in, keep placing their orders, okay? So if it's a resistance, they keep placing their sells. If it's a support, they keep placing their buys. And then sooner or later, you see that extra little bit of manipulation going for the stop losses, fake stop hunts, fake breakouts, whatever you want to call it. Not fake stop hunts. Actually, they're real stop hunts. And then the market reverses. It goes in exactly the area or the direction where you had predicted the market to go to. So that, my friends, is where the manipulation takes place. And so whenever you see an area of resistance or you see an area of support and you see a lot of wicks being created, that is basically the markets setting up the trap before they actually execute the real move. So I hope this little video gives you some sort of insight into the Forex world that is so heavily manipulated. Nothing is a coincidence in this world, in this online Forex world. And if you're a beginner, I hope you understand the logic that I'm trying to convey to you, the message that I'm trying to convey to you. And basically same thing over here. Just before we end the video, you guys can see market is creating some sort of support over here for no reason. There is no support. Yes, there is resistance over here. So the retail trader is going to think, yes, we have actually a strong support. So we have 3 touches, 1, 2, 3, and then boom, and then we continue higher. Okay, this is also an area of imbalance, perfect entry, but that's for another video. So I really hope you guys get just how that small extra little bit is actually manipulated in every time frame, on every time frame, every pair, no matter what you pick. You guys will see this happening all the time. So I hope this teaches you guys something. Please let me know in the comments below if you have any questions. Look out for new videos. Hopefully I'm going to be talking about more retail and institutional. I want to do a comparison of retail and the institutional world. So I feel like that teaches you guys or gives you guys a better idea when it's compared. So please let me know in the comments below. I'll see you guys in the next video.